This is a market review for February 25th, 2025. Today, as you can see, we were bearish once again, but I do believe that this is the new low of the week down here. I'll go over why in this. Yeah, we closed above 25%. Wick stopped just about 75 down here. On the hourly, not really much. You can just see that this low over here that was taken, price closed pretty close to it, and we went up from there. That's kind of it. You can tell less evidently here, but this is accumulation from London session. So we get a manipulation up, sweep of internal liquidity, maybe an external. Not sure. I don't think it does. And then expansion, lunch retrace started the move bullish. This is another reason why I think this is a low of the week, because in my opinion, if we were looking for lower prices, PM session would have went and tried to explore them instead of not. First thing I saw this morning was this accumulation right here. High of the range, kind of just stayed in it the whole time. Manipulated up, failed to take out this high. ES did as well, I believe. Yep. Yep, took out internal, reacted off this 15-minute right here, validated it. So as soon as this candle closed, right there, this wick came up, touched it, and then we sent price lower from there. Taking out low, 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 expanded a little past it, and then it was time for lunch to reverse. So it did that, taking out highs up here, reversing to the 15-minute. But that bullish fair value gap, the buy side imbalance, sell side inefficiency on the 15-minute time frame kept price up the whole afternoon. So now I'll get to my entries on the 1 minute, but as far as the 5 minute goes, we had a reaction here off of consequent encroachment. Expansion lower, reaction here off this 5 minute, so that's validated, so I extended that. I was looking for it to take out these highs right here as this reversed here, but what I realized is if price starts moving later in the opening range, so like the start of the macro or later, price is not likely to, whatever the grammar is on that, to reverse before lunch. Meaning, or the reason that this move here, was only a retrace and not a sustained run higher, and why this low was made first. So this 5 minute extended, gets a reaction here, get another expansion out of that. Now PM session kind of does nothing. Tries to head lower, you see it takes internal liquidity and then seeks lower prices, but this 15-minute is really cock blocking price. See the lows react off of equilibrium and the closures as well. Now on the 1 minute, again, so manipulation first, sorry, I'm getting ahead of myself. Accumulation here, manipulation up here, tripping in uninformed money, failed to take out these highs, started tumbling, reacted off this, started coming lower. Boom, 15-minute candle closed. Here, we came up to touch it here. This was actually my first entry. Now this one saved me. Well, it was close. This one had me sweating a little bit. So what I was entering off of was a continuation of this bearish move. We reacted off the 15-minute. Actually, at this point, I don't think we did. The 15-minute had to close, which was here, and price only wicked up into it here. So preemptive on my part for this entry. Now, why did I enter? Well, because we just took out this low here, retraced, confirmed here, right below concentric encroachment, had another expansion lower, fair value gap left here, was actually looking to enter off this inverse right here, but price expanded too low for my liking, so I set my limit order here, got tripped in here. I set my stop loss right above concentric encroachment, and as you can see here, concentric encroachment of this wick is 397. What? Oh, yeah, okay, yeah. Concentric encroachment of this wick is at 397, as you can see there, and the high of this one up here is 397.50. So what I do is I find concentric encroachment. Actually, I eyeball it, and then I go up a little more. So I think my stop was here. Thankfully it was, because I would have gotten stopped out. And then my first profit, my entry was right here. You can see with this red thing there. And then my first exit was below this low. Actually, no, it was at a 1 to 2, wherever that was, because this was too shallow for my liking, and there wasn't anything closer. So I got out there, and then unfortunately I got stopped at break even for the rest of it. But my profit for that, my final, was here, this low, or this low, which would have ended up happening anyways. As you can see, again, fair value gap, I entered here. My stop loss was just above this high, got stopped at a break even here, continued lower, and the reason I think for this, this SMT, of course, but the reason price had to wait up is because ES was not in sync. Once ES started going down, which was around here, that's when price really started to take off. So this entry would have been much safer, and it would have yielded a higher return. But live and you learn. That's all I can say about that. So it expands lower, taking out this low, retraces into this 1 minute here, get another expansion, takes out this low, looking for a decent sized retrace, because once again, this is the macro right here. And from yesterday, I observed that the highs of retraces, or I'll say the end of the retrace, usually happens in the macro. And this one here is that. So what I ended up doing is this is an order block here. I extended it over. I saw the way that price was rejected off of concentric encroachment and closing below it. We had a bearish extension here, and so I set a limit order. Actually, I set a limit order on this as a reclaimed bearish fair value because it was made, rejected here all the way down to here, validated it. So as soon as this candle closed down here, I set my limit order there. As you can see over here, this fair value up here extended is right where my entry was there. And from there, I first targeted a 1 to 2, which was close enough to this low. So that's where my first profits were. And then I held my second profits until all the way down here, which is that right there. So pretty successful day. But from here, we had an SMT, which caused the retrace. Trade that could have been caught here is this order block right here, because in my mind this is bullish. Bearish candle there, change in the state of delivery, closed up here, retrace, entry as soon as it breaches this high. Or if you're wanting to play it safe or get a better entry, you could go the high of this body right there. I was targeting, I didn't take it, but I was looking for price to take out these highs. Now ES took out these highs, and I came up with a, I'll say plan for if this happens, if ES takes a high before NQ, is I'll then trail my stop loss to the nearest fair value gap. So for this example, I probably, if I entered the top, stop would have gone below minus a couple. 1 to 2 would have been constant encroachment in this 5-minute right here. So that would have been profit 1, and then profit 2 and final would have been up here. But since ES took out this high and this didn't, my stop would then get moved up to the bottom of this fair value gap, which would have ended up getting hit there. Another macro here catches the bottom of this move, starting the retrace. Price comes up to this fair value gap right here. Not the right time in respect to the higher time frame and the timing of the market for a big move from here. So we took out this low. And the reason I'll say that is we started, in my opinion, this move pretty late. In my opinion, we started it here at 42, which is pretty late. The past couple of days, we've started the move like a couple minutes before market open, if not earlier. And the reversal usually happens around this macro. So that tells me we usually have 30 minutes to an hour of a trend before a reversal, or at least a high time frame retrace. And so since we started at 40, looking for an hour, which is why this low was taken. But once this was taken, lunch took over. I mean, bears profitable, switch to buy side. Again, another order block here, changing the state of delivery. We're bullish here. Confirmation here. Entry could have been heck, I don't even know. This inverse right here. Right, as soon as this candle closed, limit order would have gone here, tripped in. Stop would have to go, in my opinion, constant encroachment of this wick right there to be safe. And then what would we target? Highs. Target highs here, highs here, highs here. Preferably, I'd look for constant encroachment, which is actually where price comes up to. Let's reset this. I guess that's right. Thinking of the time I looked at this, this would be, yeah. So when I saw this, it was here. So I wanted price to retrace up to this 15-minute here. But since this low was created, actually, never mind. It still would have been that one because the nearest fair value gap after equilibrium is right here, which hits it right there. So that would have been my fulls right there. Perfectly hit too. But again, didn't take. And as you can see, that's a pretty big move. started late, started at 11:30, but it ended once it reached its goal. Um, Now it could have gone higher. I'm just trying to think of anything I can for reasoning. Duration is possible, but retrace started earlier and gone longer in the past. This one hit equilibrium, other ones haven't. I don't know. That's why it would be a final take profit, is because it has the lowest probability of reaching all the way up there, but it did. And I think part of that may be because this down here is the low of the week. In my opinion, it will be the low of the week. But anyways, the macro stops this move, right? And we start retracing, because what does the algorithm want to do, right? We tip over, we're retracing like we're going to continue the move. Algorithm kicks back in, we're looking to continue the sell side move of the AM session, so we look for highs. We take out these highs, and then we retrace again in the macro below constant encroachment within this inverse over here. So that would have been confirmation right there. Second one could have been taken here, targeting lows and lows. Unfortunately, these would not have been taken, but you would have gotten these. This 15-minute, once again, is holding price like an absolute, I don't know what holds things well. So rejected it. Boom. We see the macro here once again, but this time price literally has nowhere to go. So we come up after it, SMT of these highs, which causes this low. And this SMT just took out highs. So it being in the last hour of trading, it wants to touch untouched liquidity, which is sell side. So right there, perfectly takes this and then comes up to end the day. Now, back on a higher time frame, thinking about the rest of the week, I do think that this is the low of the week. Many reasons why. One being Monday and Tuesday were both significantly bearish, and we did not have too much of a premium opening range. Sorry, new week opening gap. So in my opinion, that eliminates the possibility of this being an entire week of downward expansion. It could be, but I doubt it. Because if we look on the weekly time frame, this is a decent sized sell side wick. I'll give it that. We could come take out these lows. That's absolutely possible. But in my opinion, this is too many bearish days in a row for the type of price action we've been in. So all that to say that, along with how price reacted here and how price did not want to continue moving, I think that this is the low of the week, like I've said many times this recording. But I do expect bullish price action tomorrow, maybe bearish overnight to get rid of this gap here. Let's look here again. Yeah, premium opening here, which means we're going to need a little bit of bearish movement to fill that. Looking right here, validated here, so maybe New York can get above this and lunch is going to retrace and then we're going to extend past that. But yeah, those are the main things. But of course, like always, got to see what London does. So London tells us how we're going to play New York. So yeah, this has been a market review for February 25th. Yep, February 25th, 2025.